Hi everyone, how are you? So we only have 20 minutes today and two very different investors from different parts of the world. I'll do two things. One, I'll try and give you a sense of if you want financing, why you should go and speak to these guys, or if you want to give them money as well, why you should go and speak to them. But I also take a bit of a moderator creative license, and we'll talk a little bit broader than financial inclusion. We'll talk about the digital transition. So those are my two objectives. You can send me questions through Slido, so please do so. I'll keep an eye on them on the iPad here. So without further ado, Eric, Arnaud, let me start by asking, tell us a little bit more about your investment mandate, or the way I would say it, what is your mandate to support entrepreneurs in the markets in which we operate? We'll start with you, Eric.
Thank you, Dea, and thank you for the opportunity to be here. My firm, it's called Monashees. We are an early stage tech VC investor in Latin America. We started 18 years ago in 2005 with a very small fund. Since then, we raised 12 funds, and we partnered with more than 150 companies throughout Latin America. We started in Brazil. We're based in São Paulo, Brazil. We have an office in Mexico City that's more recent, and so we've seen the evolution of that market and the change in the entrepreneurial culture. So we invest very early. We are a Series A investor. We also invest in selected seed rounds, but from the very, very early stages, we build portfolios to diversify the risk and help these entrepreneurs hopefully thrive and build their companies. We're sector agnostic. You mentioned digital transition. We invest in digital technology. Basically, that's our focus. Pure tech companies, but also tech-enabled companies. And I'd say the interesting thing that we saw in Latin America, and we see in other regions of the world, and also in Southeast Asia, of course, as an emerging market, is the change of the ecosystem. So in the last 18 years, we've started with a market that it was very hard to be an entrepreneur. There was no availability of capital, no examples of high growth and exponential growth companies. And 18 years later, I think we have a great ecosystem. It's just starting up, but at least we have a generation of entrepreneurs and young talent that want to be entrepreneurs. I mean, going through this change as technology also evolved, I think it's great because we help these entrepreneurs disrupt markets, innovate, and impact and have a positive impact on the millions of people and create jobs.
Thanks, Eric. How does it look from your end, Arnaud?
So on our hand, we are Bpifrance. We are state-owned, so we have a mandate from the state from the beginning many years ago, which is to support entrepreneurship in France and to support the ecosystem for entrepreneurship in France. So our mandate, if you will, is double. We can do anything for entrepreneurs from really seed investment up to IPO, and after that, listed companies. We can invest very small or very large amounts of capital. We can lend money. We can give grants on behalf of the government for innovative companies. And we also partner with commercial banks and partner with private equity funds, private VC funds. As a fund of fund, we are an LP to most of French venture funds and French growth funds, let's say, in France. So really, we try to build and grow the ecosystem, and we try to support entrepreneurs by all means. And our mandate is to make France one of the best countries for entrepreneurship, at least in Europe, and obviously, hopefully, let's say, in the world. We manage around 100 billion euros, so we can really put a lot of money, and really we want to have more and more entrepreneurs in France. We already have a lot of them. Talking about inclusion, we can do very targeted things with networks of people all across France on the field and help people build very small companies, not only tech companies. Obviously, we also do tech companies.
Very pragmatic question to both of you. What is your geographical constraint or bias? So investors need to be born where, based where, in order to have access to your capital?
I mean, entrepreneurs or
entrepreneurs, sorry.
So our natural focus is Latin America. So any entrepreneurs, building companies in Latin America. That's what is our bread and butter. But more recently, because we have seen also this generation of entrepreneurs that start their first company in Latin America, but then decide to travel abroad and start companies in other geographies. So they are connected to Latin America, that we end up having access to great opportunities outside of Latin America. So we invest also geographically outside of Latin America. We have a few companies in the US, a few companies in Europe, but there has to be a connection with Latin America. So either Latin American entrepreneurs or entrepreneurs that had an experience in Latin America, or companies that are focused on Latin American markets but have a global upside. So we have a flexible mandate in that sense, but our center of gravity is Latin America.
Okay.
And for us, obviously, we are focused on France. As an investor and as a commercial bank, we are focused on France, but we're there to grow the ecosystem again. So if you're an entrepreneur from anywhere outside of France, just come and see us and we can help connecting you, finding the right people, the right partners, the right anything you can look at in France. This we can do, and we do on a daily basis.
Okay. So one thing I've discovered preparing for this panel with these gentlemen is that even though you have slightly different business models, focus on different parts of the world, there are some commonalities in your thinking, I think we discovered behind stage. The first thing that struck me is how you think about first-time investors, or in your case, Arnaud, first-time funders as well. And as far as I understand, you have some data to back up that thinking. So if my question would be, what have you learned through years of investing on how much faith and capital you can put in first-time investors or first-time entrepreneurs? Maybe we'll start with you, Arnaud.
It's an interesting question because, as we all know, we are going through kind of a trough in the venture capital industry. And trough are always interesting times. It separates the good from the bad, for one thing. This trough is rather a gentle trough so far. It's difficult, obviously, but it's not crazy difficult. And for us, really for sure, as an LP to many VC funds, the key thing is to be consistent across time and across the cycle. That's we have learned for the past 30 years almost. And you have to remember, always remember that you make good investment in troughs. It's the basic of finance. But for many reasons, people seem to forget that or not to be able to leverage on that. So we are able to leverage on that, and we have money. The funds we have been investing in have money under management. They have the ability to carry on with their portfolio companies, which is very important. And we have the ability to reinvest in new funds. Typically what we do in trough is that we will increase the part we can subscribe in a fund, and we will increase the part we can invest in a company. I didn't say that, but obviously we never invest alone, we never lend alone. We always want to partner with private funds and private commercial banks, but we can increase the part of what we do during the troughs just to make sure that over time we keep the good companies, on board and still growing.
In our case, our goal is to build long-term relationships with the best entrepreneurs. The best entrepreneurs actually build several companies. Of course, there are some that build only one company in their lives, but there are several serial entrepreneurs that after a cycle of one company start another company. And we really want to partner with these entrepreneurs, throughout, in the long term, throughout their entrepreneurial career. And we don't have a problem starting very early. So we definitely partner and invest in many first-time entrepreneurs. But in the case of first-time entrepreneurs, our focus, as I said, is more on the Series A, so companies that have been already eliminated what's called the product market fit risk or the product risk. Then we have many examples in our portfolio of those entrepreneurs that were being entrepreneurs for the first time. When we are investing in seed rounds, when it's just an idea, and we do that and selectively, then we prioritize entrepreneurs that are more experienced or that are proven. We let the first-time entrepreneurs in seed rounds to the more focused seed funds, which is a different type of approach to venture capital. But what I can say, interesting thing that we saw develop in Latin America, and I'm sure it's the same here in Southeast Asia and other emerging markets, is that in the beginning, of our firm, of Monashees, we only had seed rounds. There were no Series A's. So in this first cycle, there were no high impact entrepreneurs already building a lot of companies. So for the first years, we invested in seed rounds. And then the market evolved and we started to see the first Series A's. And we focused that from a venture capital perspective, it's a great business model and economic model to invest in Series A's. And as I said, we continue to support seed rounds because we want to be with entrepreneurs from the very beginning if they have some experience.
Okay. I'm going to take one of the questions from the audience. It's the forever questions to investors. What do you do for your portfolio companies once you deploy capital into them? How do you nurture them? Maybe Arnaud, if you want to take with that.
Well, we do, and it's also what we expect from the GPs we are financing. We do just everything we can. So we can do a lot of things. We are connected to the French ecosystem as a whole, so we can connect you to banks, we can connect you to large corporates. We are shareholders of many large corporates in France. So that's usually something very important. You're looking for big customers, if you're a B2B company at least. And even if you're a B2C company, you need partners. So this we can do. We have chief operating officers now who can, try to connect you if you're looking for a CFO, for a CPO. These kind of things, obviously, we can do, and we can leverage also our network. So I think really the value you can bring on top of money, it's been key during the boom years, but it's still key to separate the good funds from the bad funds. And really, we want to do that and invest a part of we manage money for third parties also. So we have our own managing fees, and we invest our own managing fees in these supporting capabilities.
And if you don't mind me, Eric, I just want to follow up on this. The audience might know, but France is making a sort of big statement about welcoming entrepreneurs to the country, regulated businesses in the country, fintech businesses to the country. How does the relationship, investment or lending relationship with you help that journey? So if somebody is in the audience thinking, maybe I should go to Paris and apply for a license, should they come to you for lending, and will there be any additional support in that regulatory journey that might come with this?
Good question, thank you for that. Clearly, we know the regulator very well. Interestingly, we are regulated by the ECB. We are, statutory speaking, we are a bank regulated by the ECB. So for good and for bad, we know these guys very well. We are connected to the French regulator, which is the ACPR. They have learned, like every regulator, to work with fintech companies. Now they are learning to work with scale-up companies and fintechs that are growing within the regulatory environment. But for many companies, we have helped, leveraging things and making it as easy and as constructive as possible. So definitely, if you're looking to come to France, please drop and see us.
Okay. How does that look from Brazil?
So in our case, we are, of course, we see ourselves as a very kind of very close partner to founders. We always lead or co-lead these early rounds. We want to be the first call. These days it's the first WhatsApp of entrepreneurs. So when they need any help in good times or bad times, we're there to help. We see ourselves as a good strategic discussion partner. We'd never pretend to know more of their business than they know. It's their company. We're there to help. We're not there to tell them what to do. We're there to be really somebody to help them thrive, through these discussions, through our, being on the board, but of course, opening our network for them, for contacts and business development. We have our community of founders in the portfolio that they also help each other, and so they talk. So there is a sense of belonging to the community that's very important. When they actually partner with us, they are part of this community, and we promote a lot of events and interactions. But of course, in the end, there are two major helps that we have to provide. First is to help entrepreneurs build their teams. So it's all about people. So we have actually a structure in our team to help with talent acquisition for leadership team members. So we complement the entrepreneur as the company grows, basically between the seed and the Series B round. We're very close to there to try to find the best people. It's very important, especially in companies that are growing fast. Sometimes this can be overlooked. Oh, I need to grow, so let's hire this or that person. And you need to hire the right people, the best people, the cultural fit. So we help a lot with actually entrepreneurs putting together their leadership team. Not only the team, but also bringing advisors or bringing independent board members. And the other help, it's capital. So we also help with our network, to open the doors of other investors for the subsequent rounds, growth investors. We have a network of international investors that like to invest with us, that like to see at our portfolio, opportunities. And so helping attract talent and capital in the end are crucial for the success of the company.
And just a follow-up question, Eric, from the audience. So what's the typical size of the pre-seed or seed round that you do?
Of the seed round? Yeah, when it's a seed round, it's usually, I'd say these days, it changes, from a few years ago. But I think a seed round can go anything between $1 and $3 million of our investment. It can be a little larger depending on the experience of the entrepreneurs. And the Series A, it's more, I'd say, between $6 and $10 million these days for a good Series A. But of course, it can be a little smaller or a little larger.
Okay. I want to switch a little bit, talk about your investment thesis at the moment. And I want to talk about the economy, I want to talk about technology, and hopefully we can do that in 8 minutes. So let's talk about technology. Of all the emerging technology trends that you're seeing, the AI craze, the crypto craze, the quantum semiconductors, where is your thesis at the moment? How are you thinking about these technological developments, and how are you informing your investment strategies through them? Arnaud, I'll start with you.
Well, AI, we are very cautious because it's the boom part of the market right now, and so you have to be very cautious. It's so many things happening, it's very difficult to find the right from the bad. Still, I think we happen in France to have very good competencies, so we are more working on the, let's say, lower layer part of the ecosystem, trying to find the right entrepreneurs to really build models, not build add-ons on existing models. So that's one thing in the AI field for sure. Quantum computing also, we happen to have very good companies. So we are betting a lot of money on let's say, around 5 companies in France, which really are building capabilities, really building computers on that field. And crypto, I think, is interesting again. So it's the counter-cyclical, if you will, part of what we do. Valuations have gone down. They were crazy high. Now they are very reasonable, and you have a lot of things in DeFi, in, let's say, upper layer 1, so people are really building the big blockchains, or layer 2, which also we are looking at with a lot of interest.
Yeah, we agree with Arnaud. I mean, it's similar. I mean, in the early stage, we've learned a bit through our mentors and founders of very successful VCs in Silicon Valley. I mean, that we have to look through the tech cycles, the tech platform cycles, and these cycles, which are usually around 15 years, that they last, or as a new platform. They used to be more centered in one technology. So in terms of digital, a long time ago it was the semiconductors, and then there was the PC cycle, and then the browsers internet cycle. So each of these cycles produced very, kind of very large companies, the winner companies. And in the last 20 years, actually, we saw this more complex cycle of social, local, mobile, broadband, cloud. All these technologies actually were responsible for the last platform that we saw all these companies being built in the last 20 years. So the big question, and as you invest through the cycles, is it's hard to invest too early. So ideally you want to invest when this cycle is ready to really accelerate. And we see that happening with AI now. It's probably one of the dominant platforms. It really started incubate, around 2017 with the transformer technology, and now it's really accelerating. So now it's a great time to invest in AI, as we believe it's going to be probably the dominant technology of this next cycle of 15, 20 years. But of course, we can't ignore the potential of blockchain and crypto. We can't ignore the potential of spatial computing, especially next year with the launch of the Apple Vision Pro, may have an impact. We can't ignore neurotech, which is on the horizon too. We can't ignore climate tech and energy transition. So we're looking at all these technologies as they develop, but we still have, especially in Latin America and emerging markets, we still have delays and echoes of the previous cycle. So there's still a lot of opportunities in fintech, in normal more previous platforms as they are not totally penetrated or saturated yet.
So if I pick a little bit up on the hypiest of these technologies, which is AI at the moment, you have a similar thesis, your peers have a similar thesis. How do you compete with other peers in order to get to the deal that you really like in, let's say, artificial intelligence? Maybe some recent examples or stories you can share. If you want to start with your...
I can start. I mean, well, it's interesting. I mean,
is it a competition? Am I right in thinking
we're always competing. I mean, the best entrepreneurs and the best companies, there's always a lot of competition. It's very hard to get first. Nobody's looking, today. This was maybe in Latin America 10, 15 years ago. But I mean, we don't compete on the basis of, if you ask VCs, and I'm going to say something that maybe other VCs disagree, VCs tend to think they are tech specialists and they know the trends and everything. I really think that VCs, early stage VCs, has to be specialists in entrepreneurs. Mm-hmm. The entrepreneurs know the trends. And when we look at the deal flow, we know where the trends are going. We have to have our points of view and thesis. And when we feel really good about the entrepreneur, sometimes we have to go against our point of view because the entrepreneurs know better. And when we find great entrepreneurs, and that's our focus, then we have to compete to be with them in whatever they're doing. So in the case of AI, we try to find the best entrepreneurs doing the most interesting, disruptive things, and through our track record and brand, and of course the how we work, and other entrepreneurs can talk about, to them usually how we work. They choose us more than we choose them.
Okay. And for you, Arnaud, do they come to you or do you go to them?
Both. I think it's as a discipline, you have to go to them. And usually you have to go and get what you want, mm-hmm. rather than wait for whatever is coming. Mm-hmm. So we go and get them, we go and meet them, but we don't compete on price, for sure. Mm-hmm. As less as possible. We compete on value, and we compete on value brought to the entrepreneur, and we compete on the ability to follow on Series A, Series B, etc. For sure. Maybe to reach back on what we like, mm-hmm. I totally agree. There's still so many things to do on the digital side, classic digital side of tech business. We mentioned health before going on stage. I think it's very important. Same thing on the ESG part and climate transition, energy transition part of the field. And the other interesting thing that we see is industry getting back with big challenges for venture capital mm-hmm. firms, because you need a lot more money, mm-hmm. you have longer cycles, more uncertain returns, but a lot of the new techs will need industry. So you will need much more capex than back in the digital years. And we are trying to build the ecosystem for that. It's true in health, it's true in agriculture, it's true in energy transition, it's true in many areas. Quantum computing for one thing. So that's an interesting part too.
Okay, so let me ask a quick question in the remaining last minute. How is the economic downturn affecting your risk appetite? So how much dry powder are you sitting on? How quickly are you deploying that? Are you buying companies on the cheap now that valuations are going down? If you can just give me a quick answer, 30 seconds each, and we'll wrap it up there.
I can say in 10 seconds that as risky as accelerating too much the deployment of capital is to reducing the pace too much. So venture capital early stage is about keeping the pace. There are always great opportunities, great entrepreneurs building great companies. And now it's especially good time because the valuations are much more rational.
Well, we are lucky on this side as an investor. We can manage our liquidity and cash quite easily as compared to classic GPs. So what we are focusing on is dry powder within the GPs we are financing. We want to be sure that they're able at least to support their companies for the next 12 to 18 months. And we can extend money for that just in case, if you need an equity bridge, things like that. In many cases, we want to be sure that it's possible because we don't want these companies just for a few months to let down some of their portfolio companies.
Okay, well, thank you both. I think at the end of our time, hopefully we've given the audience enough information to then speak to both of you and your teams if they're growing in France or connected to Latin America. So thank you, everybody, and thank you, guys.